Titan is definitely the top and the big story of the day. The stock is reacting to its Q2 update. Manglam, you've been looking at the stock, up around 3-4% from the get-go. Give us a sense in terms of what worked well for Titan and the fact that it did what it did despite the gold and silver prices running up.
It was a good performance that came in from Titan. One would say, the others have done a lot better and all that and stuff, but you got to look at Titan as compared to all the others and their absolute base. So if you look at Titan, 19% growth in their jewelry business, something that the street likes. The other thing that they like is that there was, yes, obviously, ticket size increase on account of a surging price that we saw in gold. But the decline in buyer counts was very marginal year on year. So that tells you that there is some resilience in demand. Second quarter last year was a fairly high base on account of the customs duty reduction and increased sales on account of that. But, this year the festive season came in a little earlier in the second season. Early onset has helped offset the high base. But as we move forward, the other categories of the company are looking a lot better. The other quarters are looking a lot better. And internally in the jewelry business itself, studded jewelry grew in mid-teens, outpacing plain gold jewelry growth. And people have decided to play the higher gold prices, not via jewelry, but gold coins. So that contributed to their overall sales as well. So to that extent, margins become very important to track. But growth has been fairly resilient. No two ways about that.
Okay, what about the other categories? How did they perform?
Well, if you look at the other categories of Titan, they are a lot better. They're growing and they're a lot smaller in the overall composition itself. So if you look at something like their watches business, that grew in 12%, led by 17% growth in analog watches. And analog watches are margin accretive, not digital watches. Eye care growing around 9%, the domestic business. Carrot Lane, which has been a growth driver for the company for the last many quarters. Adornment jewelry and at lower gold prices. This is something which is expected to do well. So that's continued to grow at 30% as well. And international business, where the company has made a strong foray. They have tall targets here as well. The US business doubled. The international business on an overall basis has increased by 86%. And to add to that, you will have, the addition coming in from D. Damas as well. The emerging businesses, which includes the likes of fragrances, women's bag and Taneira, have been led by women's bags and fragrances. For the last few quarters, Taneira has been a bit of an underperformer, growing just at 13%. So emerging businesses growing at 37% as well. So smaller parts of the business growing extremely fast. So fairly on track.
Okay, what about brokerages? Are they happy with the performance?
They're happy. We have Morgan Stanley, which has written that, on Titan's own base, this 19% growth speaks about resilience in demand, and that's something that, they like it. They have an overweight call. They have a target of 39.53 rupees. And they believe that, going forward, the company is likely to sustain its strength. And what they like the most is that they were expecting 12% growth for TMZ. What is TMZ? Tanishq, Mia and Zoya. That has actually grown at 18%. So that's a positive out here. And they're happy. The stock up 4%.
Okay. And do the valuations justify the run-up now?
Well, for Titan, it's been trading expensive valuations for a while now. But what's happened is that, lately the premium of Titan versus the others has narrowed a little bit. Yes, Titan has been trading at premium valuations, but Kalyan Jewellers, when it was offered, it was, nearly 1/6 or 1/7 the valuation of Titan and all the others as well. So the discount as against Titan for all the others has narrowed quite a bit. So that makes Titan's valuations, given its pedigree, a lot more palatable. But on an absolute basis, obviously 51 times FY27 earnings or 63 times is expensive. But you compare that to Kalyan, you're paying 42 times for Kalyan, you're paying 31 times for Kalyan. Titan has jewelry and a little more, and the Tata pedigree. All these factors work for them, given their sheer size and growth. 63 at the higher end, but definitely palatable, given how others are too.
Okay, all right. So that is on Titan. That stock holding up with a gain of around 4% post its Q2 FY26 update.